Kathy with BKForex. If you can hear my voice, see my screen, please just confirm in the chat box. Let me know that it is working. I'm pretty sure everything should be working.
We hear you, we see you. Looks good.
Great. Okay, well, this week compared to last week is definitely quieter. There's less going on. The calendar is focused on Europe and far less so North America. I mean, the only pieces of North American data that we have is at the very end of the week, which is basically the revisions to University of Michigan Consumer Sentiment Index. Now, that doesn't matter, of course, because there's only two things that really matter in the markets this week, this month, the start of the year, or at least the past 2 months, which is number one, what's going on with Russia and the Ukraine, and number two, how the Fed's tightening policy. Well, on the one hand, we know that with Russia and the Ukraine, there really hasn't been, much progress. For better or worse, probably better in the sense that the Ukrainians are doing a great job holding back the Russians, and obviously Russia's getting a little bit more intense with their attacks, but it's still, the way it probably was last week. So it's not as if Putin has resorted to chemical weapons yet. So for now, we are seeing kind of status quo in the markets. Yesterday we had a nice rally in stocks. Today we have a pullback in Dow futures. But since we last spoke, the Dow has come, or US stocks have come back quite a bit, which represents a recovery in risk appetite. And that is reflective in a lot of the currency assets. Like, for example, that is reflective in, I wouldn't call it stability, but in some ways you could describe it as stability in the euro, where, we were closing in on 108, and, we're right now back at 110. Now, in terms of the US policy, when we last spoke, it was the day of the Fed meeting. And now we know the Fed raised interest rates 25 basis points, and the most significant thing that came out of that was that they plan to raise interest rates, or at least the dot plot showed they plan to raise interest rates 6 more times this year. We had a Fed official this week, that really for the US, it's really Fed talk that's focused, and all the talk has been positive. And we had a Fed official speak yesterday, I think it was Daly, who basically said that he would be surprised if rates were 2% by the end of the year. Mester says, maybe there could be 50 basis point rate hikes at some meeting, and maybe front loading some of the rate hikes could be appealing. So uber hawkishness from US policymakers, and this uber hawkishness is very much, I think, is very much leading to ongoing strength in the US dollar. Now today, the dollar is pulling back ever so slightly because US Treasury yields are down a little bit today, but the dollar bullish story remains intact. And I think that bottom pickers will come in, maybe not today, maybe some other time, but definitely looking at bottom pickers for the dollar. Euro, still bearish. The COVID cases are rising. The Russian-Ukraine conflict is ongoing. And this week we have PMIs. It is one of the most important pieces of data that Europe releases. And even if this month's reports are not terrible, and they're expected to be quite weak, investors are going to assume the next month's reports are going to be terrible, because that's when you really start to feel the effects of high energy costs and just high costs in general. So bearish euros, remaining bearish euros, I think that still is a very valid trade. Sterling today is down quite a bit, even though inflation in the UK rose to its highest level since March 1992. So really sharp rise in inflation, but we all know that inflation is hot. For sterling, last week we said that we had the Bank of England meeting, and for sterling, the Bank of England, they raised interest rates as well. But I think last week I mentioned that it is not so much about whether rates will rise or not. It's about where the central bank is in the tightening cycle. And the Brits last rate hike last week was the third rate hike that they gave us. The Fed was the first. So, and they suggested they could slow down. And that is more negative than positive for sterling. Aussie, I'm neutral bullish. I'm bullish because the domestic economy is going well. Job growth is very strong. I'm neutral because China obviously has a ton of COVID cases as they're locking down a number of cities, and that all of that is a problem, and that will come back to haunt the Australian economy. Now, with that said, China has pledged to provide stimulus, and if they do, that's positive for the Australian dollar. We saw reports of that drive Aussie higher. So neutral bullish. Still very bullish Canadian dollars. Oil prices are back up to 112 a barrel. Canadian economy is hot. Jobs, retail sales, inflation, all very, very good. And the Bank of Canada is hawkish, so bullish Canadian dollars. The New Zealand dollar, also neutral bullish. New Zealand data has been mixed, not as great as Australia, but far less sensitive to Russian sanctions than Europe, and also it would be a benefit of Chinese stimulus. So right now, neutral, more neutral Kiwi than Aussie, but just neutral. Swiss franc, I'm still bullish Swiss franc, so I'm still bullish Japanese yen. While I'm extraordinarily hopeful that there's a positive resolution to the Russian invasion, and hope for some sort of agreement, I still think that it could worsen before it improves. So that's why I still think investors will be sitting at the edge of their seats. And what that means is a possibility of risk aversion, which is positive the Swiss franc and positive the Japanese yen. I'm also bullish gold. Gold has moved, we caught a nice zip short trade yesterday selling gold. And I haven't jumped on this because I was a little leery this morning, but I think that gold should move higher when the zip buy zone now. This is a classic zip variation where it moved into the buy zone territory right before the hue color change. So, this is definitely a buy signal here. Taking a look at the other charts in general, if we look at the zip charts first, Euro still very much a sell zone. That's just a zip sell signal. Target actually was hit on this, but we're actually short Euros right now, and I think that there's still downside, particularly if you look at the daily chart. We're rejecting the 20 SMA. I think that there's scope to head down to 109.50. Dollar yen is in our zip buy zone, but pulling back. We're short euro yen, which leverages on euro dollar and dollar yen. Dollar Swiss, not doing much. It's in the buy zone, but it's been more of a laggard lately. We'll look at the daily charts in a second. Pound dollar, and because zip is on an hourly chart, looking like it wants to drop below the zip indicator line, which would turn it bearish. I think it's going to get there because dollar still is positive, even though yields are down a little bit. Aussie coming down, Kiwi coming down, dollar CAD rallying. So if we look to the longer term charts, we can see the dollar yen's kind of flaming out a bit. Dollar Swiss itself, you've got higher highs, higher lows. I'd be inclined to say I'm bullish dollar Swiss, but I think that, watching how it's been trading lately, I think that's really been lagging behind. I would stay out of this for now. Pound dollar dropping below the zip indicator line. Obviously, I don't love that. And I think, with pound dollar, I do think that, it could continue lower, head down to 130, 150. Aussie dollar, Kiwi dollar, two of the strongest currencies right now. But we're starting to meet some resistance. Now the real resistance is up to 75 cents for Aussie dollar, but I do think that we could be meeting some resistance there. Kiwi dollar is already pulling back. Kiwi dollar is pulling back a little bit today. Support would be at the 200 SMA is 69 cents, but I'm not making too much out of that because Kiwi and Aussie are outperformers. I mean, there's a very strong reason. We've made money shorting euro commodity pairs quite a bit, like euro Kiwi. We actually banked profits in euro CAD this morning, and there's a reason why euro is doing so much worse against those pairs because of their lack or lessened exposure to Russia. And so even if these pull back, I don't expect as deep of a pullback compared to euro and pound. Dollar CAD rallying today, but as long as it hangs below the spike high here at 126.90, I think that the downtrend remains intact in dollar CAD. There's a lot of fundamentals to support that. Rest of the week, today, we have new home sales from the U.S. Existing home sales were kind of weaker, so new home sales could be softer as well. Of course, Eurozone consumer confidence is going to come in softer. The Australian PMIs will be very interesting tonight. We know that domestically, Australia is doing very well, but globally, we're in a slowdown mode. And so it'll be interesting to see if these PMIs weaken like they have in other parts of the world. And that's the case, that could accelerate a slide in Aussie. Thursday's a big day. Thursday's when we have those Eurozone PMIs and the market's looking for a drop. It could be a much bigger drop than this. And so, that's what, I think investors will be positioning for. UK PMIs also expected to be lower. US durable goods, jobless claims, not a huge market mover, but that's expected to come in lower as well. US market PMIs. The Philly Fed and the Empire States were softer, so the market PMIs should be softer. Tons of Fed speak, far more important than data from the US this week, but all of them have been leaning one way, which is hawkish. Tokyo inflation data, that'll probably be positive as well. And then Friday, we've got UK retail sales. That will be an interesting one. Markets are looking for a weaker US retail sales release, and I think that could be true as well. Driven IFO, most certainly business confidence will have taken a hit as a result of the Russian invasion. And then the revisions to University of Michigan Sentiment Index, not a huge market mover, but all of this Fed speak. Williams, Barkin, Waller, that will be very, very interesting to watch. All right. So any questions from me before I turn it over to Boris about FX? Gold in general, as I said, it's in the buy zone, but realistically, it's just kind of consolidative. It's consolidative, but with a little bit of a bias to the upside, I think, for now. Fundamentally, it's not. Fundamentally, we've got the dollar strong. That is more negative than positive for gold. But because we do have a bit of a pullback in yields today, in Dow today, that is one of the reasons why gold is rallying. Any questions?
Okay, great. I'll take over, Kay.
Great.
Let me grab the screen. On my screen, we should be able to, give me just 1 sec. Let's see if it's coming up here. There we go. So we're going to start with oil as a main market, which I think is sort of interesting because obviously oil is the tipping point. And before we kind of even start, I want to just give you an idea of, this is the latest version of my bounce indicator. This is oil on the daily chart against the monthly highs and lows. Obviously shows a very, very strong upward trend. The green shaded areas are basically areas of intense buying. The red areas are areas of intense selling. Generally, if we're going to trade counter trend, what we want is red candles after green areas. So this was actually a very, very good sell signal. Blow off top, intense buying. Then we have a reversal candle that provided like a 20-point move in oil. Then we had a bounce off the lows. This is the monthly lows, green candle here. And as I said, I thought a couple of weeks ago, 95 was going to be support zone because this was also a support zone here on the charts. And we bounced back up. And now we are at this middle stage. We're essentially at mid level on the market, midpoint of the monthly flow, and really nowhere, in neither buying nor selling as far as intensity goes. And I think it suggests a balance at this point. I mean, this is in many ways this kind of equilibrium. This is the new equilibrium. This, I would say, generally, fundamentally, it looks like the new equilibrium in oil is around 110 WTI, unless the situation begins to worsen. In other words, unless supply starts to really get cut off, or demand begins to wane a little bit. But it's very, very hard to make any kind of easy fundamental forecast, because everything is clearly unknown with regard to Ukraine and Russia. One of the things that people talk about in Russia is that if Russian oil isn't moving off the ports, if buyers are backing off from buying Russian oil, which was the case, there was a lot of self censorship, self boycotting from many companies in the West from buying Russian oil, they will have to stop producing it, because they'll just simply run out of inventory space. So if that's the case, that's going to take more supply off, and ultimately could create longer term upward pressures on oil. It's really hard to, it seems like, honestly, the whole situation seems to me sort of like a binary scenario at this point. Either we have some sort of a diplomatic solution in a week, or it just becomes an unbelievable grind. I mean, there's always a third scenario, which is very unlikely given the reticence of NATO. But if the NATO summit today, they decide enough war crimes, enough civilian deaths, enough atrocities, we're just going to come in. And as you can see, the Russian army is a paper tiger. Yes, they could threaten nuclear weapons, but my personal view is they should call the Russian bluff. That nobody in the Russian high command is going to authorize the use of nuclear weapons, because it will just mean absolute evisceration of the whole country within 1 second by U.S. forces. The smart thing, in my opinion, would be to just simply call the Russians bluff and say, we're going to do a new no-fly zone, get out of the country, goodbye. And they will turn their tail and go backwards. It's a country whose army has clearly shown that it's horrible. But that's not going to happen for political reasons, which means that we'll probably have a stalemate, or somebody prevails on Putin to make a deal, which is unlikely, because I think he is in this the way Hitler is to the bunker. In other words, he's in this to kill everybody or to die himself. And unfortunately, what's happening now is a lot of innocent lives are getting lost as a result of this. So if we're in a grind, that ultimately puts upward pressure on oil. It really does, because it means that there's long-term supply removal of Russia from the global economy. And I think ultimately that what that shows you is that oil probably is going to be it's basically a buy to dip trade until proven otherwise. So that's essentially where the oil market stands at this point. Near term, we can dip up and down, but ultimately, if you're sort of a long-term trader, you're essentially buying all the dips until the 92 support, on the assumption that we probably make fresh highs. We recovered the midpoint. Fundamentally, unless we have just peace breaking out, which is a minuscule percent scenario, we're likely going higher than lower. So the pro-war trade, which is long oil, long gold, certainly seems to be working a little bit. Here's gold. Gold had this big parabolic high, but if you sort of look at gold at a longer term basis, you see enormous amount of buying pressure, right? Big correction, and again, support into longer term support here. And that suggests also to me that for now, unless proven otherwise, it's a buy the dip trade. I mean, basically, unless we break the 1800s, this is essentially, world at war trade. The world at war trade is long oil, long gold. Until that dynamic changes, you kind of have to be a dip buyer in both situations. Even though we've had, obviously, you certainly didn't want to chase the highs. Oil is notorious for fake breakouts. We faded the breakouts here, but now that we kind of consolidated, excuse me, it really comes the moment of truth. If you want to maybe come in with small risk, you can come in here with a stop at 1850. It's only about a 100-point stop. If you want to have a little more confirmation that we're in an upward bias, you may want to come in 100 points higher when it retakes the midpoint, as on a way to possible maybe challenge of the fresh highs. If oil takes out fresh highs over the last, let's take a look at this. So if we go back into the monthlies, if it takes out the fresh highs from 2011 right over here, or the pandemic highs. So basically, the 2000 highs, it kind of stays there. Basically, if oil can close above 2100 on a monthly basis, that's very bad news for the world. There's nothing good about that situation. And the only good thing is, that if you're long oil, long gold, you're going to do well. But there's just really nothing positive about that development, because that just really means world at war as far as that goes. And very high inflation, lots of geopolitical risk, just all the worst things of the 1970s redux. And maybe that's where we're going. But really, until the price gets there and holds there, you just you have a mild upward bias, but the full upward bias only gets confirmed when it hits those highs. Now, turning to equities, I want to just point your attention to something very interesting. This is something we talk about in my trading room all day long, and this is a statistic that we use every single day to our advantage. This is the stock market, and honestly, the data goes all the way back to the 1950s. This is just simply the most recent data, where the skew has been hugely positive. But what this is the number of up days versus down days in the stock market on an annual basis, right? Or in this case, it's in a 5-year batches. This is from this is a 20-year batch, and this is the last 5-year batch. And you see almost, effectively, it's a 10% spread, right? Now, if you think about the roulette wheel in casino, it's a 51.49. It's actually 50.5 against 49.5. It's literally like a 1 to 2% spread, and the casino makes money all day long. So if you have a 10% spread, you can imagine how much more productive it is to buy the dips than it is to sell the rallies. And that's a technique we use in our day trading room all day long. So if we go to here's Nasdaq. I mean, right now Nasdaq is falling, but just sort of show you that on a I'm on the monthly charts. Now let me show this to you. Yeah, this is the 1 minute charts just to show you. The point is that, and we just completed a trade. Maybe it's better for me to show you the Dow trade. The point is that when you have such a strong upward bias, yes, you could make your money to the downside, but you have a much higher percentage trade when you buying the dips. When you hit the lows and you have green candles, that give us significance on the bounce. Like buying this dip, we just bought this dip, made money, bought this dip, made money, and now we're getting close to perhaps a fresh dip over here for a turn trade. So it doesn't work all the time. It's only a 55%, 45% spread. But the point is, it's such a huge spread that most of the time, buying the dip is a far better strategy than selling the rally. And that's super important to remember when you're looking at stocks. And then when you look at them on a much longer term time frame, that also shows you, like here we make monthly lows. Here's the daily reversal candle. the actual move here is enormous. It's a 1,000-point move, right? That's an enormous move here in the Nasdaq to the upside. Now we're clearly entering the top zone here. We hit you know, fresh March highs. Today it looks like going to be kind of a reversal day. I'll tell you this: if you're trading today, and you know, we're kind of selling off right now, if somewhere in the middle of the day we go through 650, you know, what's the high here? I guess, like, let's say 685. In other words, if we're able to recapture yesterday's highs, that will be super bullish. And that means we generally have a chance to make 14.8, and we possibly could even extend all the way to 1500. And the question is, like, you know, why are equities rallying amidst all of this dour economic or geopolitical backdrop? And the answer is just very, very simple. The reason why equities are rallying against the dour geopolitical backdrop is, as macabre as it sounds, war is actually really good for business, because think about what's going to happen. Ukraine has been decimated. It's going to need to be rebuilt. The Europeans, the Americans, everybody's going to give them billions and billions of dollars to rebuild European equities. One of my bigger themes is, I think that long term, and you can see this already in the DAX. The DAX is a very, very strong buy to dip story now, because no matter how, you know, horrible you think situation is in Europe, ultimately this is a V-shaped recovery. Ultimately, it's going to be very positive European industrial production, because they're going to rebuild all of Europe as a result of this. So I think generally, you know, this is what the market is kind of signifying, that it thinks growth is going to be okay, and equities look to be, you know, generally a long-term buy, but of course, you know, near term, perhaps near-term correction on the side. And then last but not least, let's take a look at crypto, and we'll take a look at Bitcoin, which is not looking bad, right? I mean, it's range bound. We've said it's been range bound. It's essentially a 35-45 trade. If you know, if you're looking for some kind of long-term trends, that's not where you want to be. But we did say that there is a nice clean upward bias. We did made a bottom last week. We retook the midpoint. That's a very, very positive sign. We retook the midpoint range, and really now it becomes a 40-45 trade, right? So now crypto is becoming an interesting trade to the upside. It's impossible to make any kind of fundamental moves forward, because I think crypto is very much a sentiment-driven trade in terms of risk aversion. But what I think is coming clear is, until proven otherwise, we've essentially found a fresh bottom at the 30, or fresh bottom value at the 35 level. And I think if we, you know, let's just take a look at the monthly chart, because I think this is so interesting. So first, Bitcoin wave higher, right? First, Bitcoin mania finds support at the 400 level, right? Kind of like this was the crazy mania. Then, you know, we found essentially support. Sorry, I take it back. At the 3,000 level, finds the support at the 3,000 level, right? Next, Bitcoin mania, right? Really finding support at the 30,000 level, right? So 10x level. And I think that's kind of how you have to think about this. There's been a reappraisal, repricing of the asset at this level. Now, you know, 10 years from now, is this going to be, you know, 100? Next Bitcoin mania takes us to 100,000 to maybe 300,000 on the move, perhaps. But until we sort of, unless we break this 30,000 level on a hardcore basis, this seems to be the new value proposition for cryptocurrency and everything else that's going on. And I think that's going to be the, you know, the interesting look for us in terms of how we analyze it on a longer term basis. So let me see if I have any questions. No questions here. If you guys have any questions, post them up. But otherwise, as Kathy was saying, yes, it's quiet, it's churn. There are some mild biases that are happening. And, you know, perhaps to me, the strongest bias is upward is long oil. With the next strongest bias is buying the dip in Nasdaq and everything else. But otherwise, everything else is just kind of middle ground, and you have to just trade around the edges or just trade the ranges. That's kind of the story as this week shapes up. Okay, so I see everybody's pretty clear on where we stand. I leave it to you guys to make trades today. As I said, an interesting thing for you to consider is if we can recover to yesterday's highs in Nasdaq, uber bullish signal. And in other words, if Nasdaq turns around, turns positive, you got to be a buyer, because that's a strong signal that equity buyers really want to get long. Okay, everybody have a wonderful day, guys. I'll see everybody in the markets. Come join us in BKForex and trade with me live every single day. I'm about to start my live trading trade at 9 o'clock. Kathy right now just hit her profit in Eurodollar, as I just saw the message flash across my screen. So you want to trade FX? You want to trade indices? You want to trade oil and gold? I'm there. We're there every day making pips. So hopefully we'll see you guys in the room. Everybody enjoy. I'll see you guys later.